Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Friday. Happy Friday, everybody. It is June 7th. Today's the big day for jobs numbers, so let's jump right into it. So we had 263,000 jobs for the month of April. However, it was reduced down to 224,000. In the previous month, it was reduced from 189 down to 153,000. So that was a trim of about approximately 75,000 jobs that they announced that were created were actually trimmed off the numbers there. So, however, forecast for this month in April or May's payrolls was 180,000, and it came in similar to the ADP, very disappointing 75,000 jobs here. However, if you look at the unemployment rate, we're still at 3.6 across the board. We're still at a very low unemployment rate. Average hour earnings, the previous month in April went up 0.2%. They thought it would kind of go up a little bit more at 0.3% in May, and it went up 0.2%. So people are still making a little bit more money, but again, pretty modest. Also, inventories had a pretty good jump here in April. As you see it from from March, it went up 0.4%. In April, it jumped up 0.8%. So that's a pretty good little boost in wholesale inventories. So let's see how this plays out to the headline news. The stock market is up. It's actually doing pretty well here. And why you would consider having the stock market up pretty well in terms of very low jobs numbers, which is pretty disappointing, is because, well, in this scenario, it's a bad news is good news. The investors are figuring, okay, these revision of job numbers are lower to this disappointing number that came in. May move the Fed to move sooner than later in terms of a rate cut. So they're really wanting that rate cut, and they feel that this could be the catalyst that could push the Fed to go ahead and raise rates, or I'm sorry, lower rates. Excuse me, I meant the opposite way here. So they're kind of factoring that, and maybe even as soon as this summer when the Fed meets, that they could potentially cut rates. On the updates for Mexico and China, it looks like there's some progress being made with Mexico. I don't know if it's enough yet to warrant a halt from President Trump from applying those tariffs on Monday, but they're saying that there's a lot of progress being made on there, and perhaps there could be a deal to be made there. China, really nothing more to say about it. We're still at a standstill here. Nobody's yet to make offer the first olive branch. China basically has made comments saying that they have enough. Their People's Bank of China basically said they have enough in there to stimulate the economy, even though they're in a trade war and can get their stuff moving up and moving and stimulated. So a lot of it has to be seen, yet to be seen. So we'll see. So let's see how this is playing out on the bond market. Bond market's up about 17 basis points, which is good for improvement in our interest rates. So we should have better pricing on interest rates today. And a lot of that has to do with the yields falling further. We're down to 2.07 now if you round upwards. So that's the good news for the day is even though the stock market's up, also interest rates improve. So nice happy medium for both sides here. All right, folks, you guys have a great rest of your day. Enjoy your weekend, and we'll look forward to see you guys on Monday. Thanks so much for watching. Bye-bye.